You guys
Yeah.
are a lot more founder friendly in the UK. I mean, in the United States, just to go ahead and talk with investors to see if there's an appetite, they call it testing the waters here. It's 1,000 hours of lawyer time, and those lawyers are going to charge you $2,000 an hour. If I'm interested and curious to see if investors would buy, that's different in the UK. Can you talk about that a little bit?
Yeah, I mean, it's an important point. I mean, testing the waters is much easier to do in the UK, and it's much less expensive to get to that point. Now, I like to call it like try before you buy, because the whole point is that, maybe you've introduced me to an opportunity, Jonathan. Thank you. And what I will do is I will say, here are 5 investment banks that, given this company's size and sector, are a good fit to help them. And I'll do warm intros for that company. Obviously, we've gone through them the process and explained to them how much it costs and all this kind of stuff. We've done all that background work with them, and then we'll introduce them to the investment banks. If the investment bank and they decide to work with one or two, if the investment banks, are happy to go forward, right at the start of the process, they'll say, we're going to take you to meet 10 investors, real investors. And all you need to do to get to that point is really have a presentation that's been verified by a lawyer. That's going to cost you a couple of grand probably to do. I mean,
So
literally that simple. And then you go to London and you meet face-to-face investors, you get the feedback. If you like what you hear, keep going. And by the way, you've got multiple chances to do that before you actually go on an IPO roadshow proper. The US is a much less flexible than the UK, and it's much more costly to do this. And as a result, the UK has a superior price discovery mechanism. Actually, Europe has this too, has a superior price discovery mechanism. And also, we still have deal research on UK and European IPOs. So the banks will put out a research note to institutional investors and gather feedback to set the price range on the basis of that. And so it's pretty unusual, in fact, it's very unusual in the UK and Europe to see IPOs change their initial price range. Or in the US, it's completely normal to see it because you don't really have enough feedback to be able to set your price range. And we had a couple of situations in the US in January where there were drastic changes to the IPO price range. This wasn't in tech, it was in other areas, which were eye-watering and going, how can you not have visibility about what investors are thinking before you go into this process to be able to set your price range? In the UK, you do. You absolutely do. In fact, you can pull the plug if you're not liking what you're hearing from a valuation perspective. And that can be before you spent a lot of money. So I think it's a really important difference, the optionality of the UK process versus the US. So again, as I say to people, you don't have to take my word for it. You can actually hear it from the horse's mouth, from an investors telling you what they think about your equity story, what they think the comps are, what multiples they're going to use, how they're going to value you. And you can go forward or stop on the basis of that kind of feedback.
So if I'm a startup, I'm doing $50 million a year, $30 million a year in revenue. I'm thinking of going out for a raise. You're telling me that I can essentially talk with a couple of banks. They will put me in front of 10 investors, and those investors will actually tell me if they would buy my stock in an IPO and at what price. Does that happen?
Listen, they might say things like, oh, I think that a good, comp for you would be this company or that company, and we're valuing them off this multiple. And you can assume that they're going to want a discount to that multiple because actually that's rational
Yep.
because they buy those companies today in the market and those companies are seasoned and have
Yep.
attracted. So of course they would like a discount to those companies, but it gives you a very clear idea. Now, when it comes to the actual deal research, yes, they are getting specific feedback about where they should be setting the price range. And
So,
so there's much more. I mean, it's not precise, but
yep.
there is more certainty in the UK and European process around this kind of feedback than there is in the US. And the US is just really expensive to get to that point.
And so how much time would I, as a CEO or CFO of a startup doing 30 to 50 million a year in revenue, how much time would I have to invest to actually get to the point where I get to talk to those investors?
Not a lot at all. I mean, we're talking from the initial conversations with the banks. I think within a month, you could certainly 4 to 6 weeks, you could be meeting with investors if that's what you wanted to do.
Yeah.
you were well prepared, they could definitely be very quick. Banks would obviously help you refine the presentation to make sure it was ready for the eyes of those investors. But yes, I mean, you could do this rapidly. Before, by the way, you've started to draft a big document. You know, on AIM, it's called a mission document. For the UK main market, it's called prospectus. Obviously, S1 in the US, or F1 if you're a foreign private issuer. Before you've really started to draft any of that, you can have those meetings.
Another superpower that being public actually gives you is the ability to actually use your stock to acquire another company.
Yeah.
So I'm trading at 6x revenues or 10x revenues. There's a startup in another market that I'm interested in acquiring. I think I can acquire them for 5x revenues. If I want to do that in the UK, what would be the process for my actually doing that if I was like listed on your growth exchange, the AIM?
You just do make the offer to the company and see if, I mean, we've had plenty of UK listed companies from the US that have used their stock to buy US targets. So I want to make clear that has happened. They did not have to have US listed stock for that to be accepted. So there are precedents for this happening. And that's one of the big advantages of being a public company, is the ability to use stock in addition to cash, or stock only. You can do stock only deals if that is, palatable to the target. And so, but all of those things are doable. And, I can think of multiple precedents from companies that are US based, UK listed, that have done this. Oh, by the way, I should say something else about this. We talked about this right at the start of the 2021 version of this. You don't need to be UK PLC or a UK incorporated company. You can be a Delaware incorporated company. You don't need to use IFRS. You can use US GAAP. So I think it's important for people to say they don't need to change everything if they go and list in the UK. Then I would also say is we've got many precedents of companies when they've got larger, listed back in the US and being very successful. So for me, it's natural that a US company may want to look back to the US when they get larger, when they're large enough, as we talked about right at the start, when they're large enough to be of the right scale to be of interest to US institutions. That's, plenty of instances of that happening. But what I would say is they probably wouldn't have been able to get there if they hadn't gone to the UK first and got that institutional capital, growth capital, follow-ons, got larger, done acquisitions, all these things. The US market, public market, was not there for them at that stage, down the line, but we helped them get there.
If I'm not a UK company, why would I want to list in the UK? Isn't the UK stock market just for UK companies?
No, actually, it's the most international market in the world as a proportion of the international companies you have listed versus domestic. And also, even when you look at the companies which are UK companies, their revenue base is international. I mean, I think the FTSE 100, something like 75% of the revenue of the FTSE 100 is overseas, as an example. But why this is important is the investor base is very used to investing in international companies. Flip this on its head, the performance of international companies that go to list in the US is actually very poor, including UK companies. A lot of people don't understand this. They think that, the US is the path is paved with gold, and if you list in the US as a UK company, everything will be great. Actually, for the vast majority of companies, performance has been very poor, and actually US investors tend to favor domestic companies over international companies, and there are lots of precedents and case studies around this, and yet people still turn around to me and say, "Oh, as a $500 million market cap tech company from the UK, you should list in the US." That makes no sense. I would say pretty much makes no sense under any circumstance. And there are, people will point to ones, the odds, it's almost like the success story that proves it's the exception that proves the rule. People look at ARM and go, "Oh, ARM's a UK company, did amazingly well." But it's like, well, it was around this entire AI thing right at that moment. It was perfect timing for ARM. And by the way, it's an enormous company. By the way, do I think they could have listed successfully in the UK and got lots of demand? 100%.
When a company lists in the UK, can US investors actually participate in that?
Yes. Yeah. So the people who can't are retail because the SEC quite rightly doesn't want I would say unsophisticated. And I'm not saying that all retail are unsophisticated, but yeah, I think you understand what I mean.
Mhm.
That you can access, they can access the stock of these companies without them having gone through a full SEC registration process. But US institutions can certainly participate and do often do. Certainly, it just really depends on the size of the company. The issue is US institutions tend to prefer larger companies. So we've had some of our US companies that have done AIM floats do an offering into US institutions, and that's been fine. For the most part, they tend to be slightly smaller than the US institutions tend to like. As they get bigger, US institutions definitely come in and buy um, the US companies that we have listed in London.
I know that I've talked to you a number of times, and you very specifically talked about like companies in the $200 million to $2 billion range. Like those are the companies that you
Yep.
actually want listed on the exchange. Whereas I talk to the people who are in charge of listings at the NYSE, at the NASDAQ, they're like, yeah. Why are you guys actually focused on that segment of the market?
Well, I would say I am focused on that segment of the market, US to UK. If you think about my colleagues around the globe who did the same job as me, they're looking at companies of all sizes, and there's
Okay.
no reason why a $50 billion market cap company can't do an IPO in London. But if I'm really talking to a US company, I need to be realistic and say a $10 billion VC-backed company in the US is not going to do a London IPO in most instances unless it's got some very strong connection to the UK. Now, at the smaller end, we can offer a significant advantage over the US public markets and also an alternative to private capital if people want it, which gives founders, CEOs a lot more control than taking private capital from VCs, and it's really good for things like buy and build type strategies as well. So, that's why I focus on this smaller end of the market. Is because the UK has a significant advantage from a public market perspective over the US in this kind of area. And I just don't think that the average either VC, growth PE, or founder or CEO realizes what the opportunity is. And from a VC perspective, I think it's important to say it is easier to sell down at the point of IPO for a UK smaller microcap growth IPO than it is in the US, simply put. So you're more likely to be able to get cash return on day one. If you care about DPI, this is for you.
And there have been a number of articles recently talking about how limited partners in the United States, or limited partners in general, are just beside themselves having to wait 14 years for a VC fund to actually show them some returns. And as an employee or an early investor, as an angel, like waiting a decade and a half to see if I made a good investment or not, that just, it is very frustrating to me, and it would be very frustrating to me. So Chris, when you first talked to me about this 7-ish years ago, you were saying US companies can actually list. Can you give me a couple of examples of US companies that have listed? You talked about that one, the assets for Montana, the CEO is in December. Can you talk about a couple of others?
Yeah, so the largest IPO and AMR growth market last year was a company called AOTI, medtech company from California, $40 million of revenue, positive EBITDA, and that company did an AIM IPO middle of last year, $45 million deal size, I think 25 primary, 20 secondary. So it goes to the point exactly making. You've got incumbent shareholders who are looking for liquidity, and they got it. The market cap was about $180 million from recollection. And, that is our kind of bread and butter type deal. Now, we had two smaller deals. I talked about Helix, which is the one from Montana, which is in helium exploration. I realize most of the people you talk to aren't interested in helium exploration, although helium is actually very important for semiconductor manufacture and for rocket manufacture as well, and rocket operation. That company, and then there was a company called Microsalt, which does food technology, basically low sodium ingredients for snacks and things like that. The latter two were two of the top three commercial company IPOs in terms of performance in the UK last year. And I said Helix has already come back. Actually, both Helix and Microsoft have done follow-on offerings since they were listed. So access to capital on an ongoing basis. They're much smaller than IoT. But what I'd also say is like, let's go back in time to some of the companies I talked about in the past. Boku was one of that I mentioned in 2021, which was backed by Andreessen, Benchmark, Khosla, NEA, Index. US, Delaware Incorporated company, probably had about $20 million of that deal was 60% secondary. Again, look at their trajectory in the UK. And there's going to be we're going to put a video of their CEO talking, actually. He was asked, why would a US-based, US VC-backed fintech company, because it does mobile payments, list in London? What about valuation? And he simply said, well, as a matter of fact, we trade a significant valuation premium to our closest US listed comp, which is dLocal, as an example. That just shows you, and Boku has had a great trajectory in London, done acquisitions, done follow-ons. The VCs have been able to get out very quickly. Within a couple of years, they were out. But the company's been able to, kick on, raise more capital, do acquisitions. Performance has been great. It just shows you what, that was probably a 200 million market cap, a bit less than that when it went public. It's probably 800 or so now. Just shows you what we can do. On the life science side, Maxight's always been a great example. Listed in 2016 with a $45 million market cap.
Wait, 45?
And probably now is around, and then it did multiple follow-ons, then listed on NASDAQ. So talking about the stepping stone idea, 2021 did a $180 million offering. And at that point, it was a 1.3 billion market cap. So it went from 45 to 1.3 entirely on AIM in London, then listed in the US. It's come down now. I mean, virtually the entire life science sector has. It's still 500 million or so market cap company. Started at 45 million in London. There's no institutional capital in the public markets for a company like that in the US. That's the point. And that was a revenue generating life science tools company. And that's what we're good at, helping those kind of companies.
Last question, Chris. I've heard that London is a decent fintech hub. Can you talk about investor appetite for fintech in London?
Yeah, I mean, I think there's the view that it's not just about the capital market. It's about, there's been a lot of innovative companies that have been born in fintech that have been born in the UK. So you can look at people like Wise, obviously Revolut, people like that. So there is an ecosystem. The government was always very anxious to create a regulatory environment where people could experiment and where startups could actually feel that they could grow without being stifled by regulation. And as a result of that, you've seen a number of very large companies emerge from that ecosystem. And obviously the UK has a huge financial markets infrastructure. Yeah, I think the point is that it's not just about the capital market, but it's about the entire financial service environment in the UK. Regulators, government, we're all behind this as a place, a branding as well, quite frankly, around London as a financial, a fintech ecosystem. And there was, those companies attracted significant amounts of venture capital. And obviously we've had ones like Wise, Wise was the first major company to do a direct listing on the London Stock Exchange, which went without a hitch. Basically, it's actually much easier to do a direct listing in the UK than the US. You don't have to wait 5 hours for your stock price to actually appear. Whereas in the UK, you do the opening auction and there's the share price has appeared. So that's very different as well. So what I would say is there is a significant understanding and appetite from the investor base. Boku is, again, a US company, a really good example of that. For these kind of companies, I think there's a big opportunity from developing markets, Latin America in particular, where there's a lot of great companies that have come from that, and a lot of them still are private, where I think there'll be a lot of appetite amongst the UK investor base to invest in, companies of the size that I've talked about, a couple of 100 million to a couple of billion, they're not going to be large enough for the US ecosystem, but in the UK, they will get a very strong hearing and then be able to raise capital, and their investors will be able to get liquidity. So actually, I think that's going to be one of the key themes over the next couple of years will be how we can help LATAM, and obviously other jurisdictions. Africa's got lots of cool companies in this area as well, but obviously I'm more focused on LATAM. So to be the one there to be ones from there, I think that's going to be a key area for us in the next couple of years.
Chris, I got to say, when you first talked to me about this 17 years ago, I was very intrigued, highly suspicious. I've actually talked to 30 stock exchanges around the globe, just kind of comparing and doing my due diligence. I firmly believe that you guys have the best small cap product in the world. And hopefully we can actually get some more companies to actually leverage the tools that you guys have, because I think it's pretty fantastic, very founder friendly. Looking forward to getting to work with some more companies with you.
Hope so, Jonathan, and thank you for your support. And I hope we can do a lot more together.